Welcome, everyone, to the Deep Dive. We're brought to you by Defiant. That's the on-chain lifestyle sports brand helping you stay ahead.
That's right.
Today, we're jumping into the big news, starting, as always, with DeFi and crypto. We'll break down what's happening and, more importantly, what it actually means for you.
Yep. Got quite a bit to cover today. Some really interesting developments showing how things are evolving in the space. Different pieces, but they could kind of tell a larger story.
Definitely. Let's start with Pixels. They've rolled out something pretty new for staking their PIL token.
Ah, yes. The game staking. It's different.
Yeah, instead of, staking to validate the network, you stake to back your favorite games in their ecosystem.
Which is a fascinating twist. And the reward mechanism is interesting too, isn't it?
Right. You get rewards in VPX CeLO. It's a spend-only token, specifically for buying things in-game. The idea is it cuts out extra transaction fees.
Makes it smoother.
So this feels like it could really change how players connect with games, right? More loyalty, maybe?
Absolutely. Think about it. You're directly incentivizing players to support the specific games they love within the platform. It's clever for building, like, dedicated fan bases.
Yeah.
And it might be a model others try to copy, Deeper engagement financially and emotionally. Plus, that VPIXEL token, it really simplifies the user side, hides some of the blockchain complexity for just playing the game.
Good point. Okay, shifting gears a bit. Institutional interests. 21 shares just filed for a spot SUI ETF with the SEC.
Another one. Yeah, this is aimed squarely at institutional investors. Gives them a regulated way to get exposure to SUI, the native token of the SUI blockchain, without holding it directly.
And no big surprise, SUI's price got a nice little boost when the news broke.
Well, yeah. The market sees that potential inflow, right? If institutions start buying through an ETF, that's potentially a lot of capital coming into the SUI ecosystem.
It just makes it easier for them.
Exactly. It fits into their existing world of regulated products.
Yeah.
It's another sign of that bridge being built between traditional finance and these newer layer 1 blockchains.
Okay, let's talk big money. Tether. They just announced their Q1 operating profit, over $1 billion.
$1 billion. Just operating profit. It's huge.
And apparently a lot of that came from returns on their U.S. Treasury holdings. They're holding almost, $120 billion now?
Yeah, nearly $120 billion in treasuries.
Yeah.
It really shows their scale. And their USDT supply also went up by about $7 billion in the quarter.
So what's the takeaway here? Stablecoins are just immensely profitable and growing.
Oh, it certainly underscores Tether's dominance, yeah. And its profitability, largely driven by very traditional assets like treasuries, is kind of an interesting dynamic, isn't it? A crypto entity thriving off TradFi yields. And the supply increase just shows ongoing global demand. People need stablecoins for, all sorts of things in the digital economy.
All right, sticking with big commitments. The Blockchain Group, a European company, they've announced plans to acquire up to 260,000 Bitcoin.
Up to 260,000 BTC.
By 2033. That's a significant amount, like almost 1% of all Bitcoin that will ever exist.
It's a massive long-term bet. Really signals deep conviction from an institutional player in Bitcoin as a store of value.
And if they actually manage to accumulate that much,
it could definitely impact supply dynamics over the next decade, you'd think. Makes Bitcoin even scarcer if large chunks are being held long-term like that.
Okay, one more piece of news, this time on the exchange front. Kraken. They reported a strong Q1. Revenue is $472 million. That's up 19% from last year.
Yeah, solid growth. They're saying it's driven by market volatility, which makes sense. More volatility often means more trading activity.
Right. And they've been busy too, right? They acquired NinjaTrader.
Yep, expanding their offerings. And they saw funded accounts go up by 26%. So more users putting money onto the platform.
So it shows exchanges are still doing well, growing their user base.
Absolutely. Kraken's performance highlights that user engagement is still strong. People are trading. New users are coming in. The acquisition suggests they're also thinking strategically about, broadening their reach beyond just core crypto trading.
Okay, so let's quickly recap. We've got Pixels innovating in game staking.
Yep, user engagement focus.
21 shares pushing for a SUI ETF. Bringing institutions closer.
Bridging TradFi and Layer 1s.
Tether showing massive profits and stablecoin demand.
Financial muscle.
The Blockchain Group making a huge long-term Bitcoin bet.
Serious institutional conviction.
And Kraken demonstrating strong exchange growth and expansion.
Yeah, infrastructure thriving. It's quite a mix, but it all points towards a space that's maturing and expanding in lots of different directions simultaneously.
It really does. So that's our deep dive for today, brought to you by Defiant. Lots to think about there. How do all these different threads, gaming, institutions, stablecoins, long-term holding, exchange growth, how do they weave together for you? Which story caught your eye?
Definitely something to keep watching.
Thanks for tuning in.